All right, hey there. Good morning, everybody. Christopher Franks with Texas West Capital. It's just a few minutes after 11 a.m. Central Standard Time here on Tuesday, the 3rd of August, 2021, here in beautiful Boerne, Texas, and yet again, it's overcast. It seems like anytime I'm live with y'all, it's either overcast or rain coming in. Excuse me. If y'all caught my guest slot there on that podcast yesterday, you might have heard, I think right as we started it, there we had some real huge thunder hit just right overhead, lightning, and man, we survived that, luckily, made it through it. What I mean is that from the night before and early that morning, the weather had gotten so crazy and hard over here, they kept knocking out the internet, so I was kind of concerned that we weren't going to be able to do that, but that was a good time as always, I can't even say it, as always with Dale. So hopefully you guys tuned in on that. How's everybody doing this morning? Y'all doing all right? You surviving this Bitcoin pullback, this dollar advance? I don't know. Again, guys, I still think the best pair right now for the dollar with the forex is the USD against the loonie, against the Canadian dollar. Snagged another. I got out a little bit early this morning. I thought it was going to pull back a little bit earlier, so I got out at around 64, 62 pips. Since last night into this morning, and then it kind of shot up and hit the R1 pivot there on the 1 hour. But I think it came up, it pushed up through the pivot, pulled back, retested support, shot up to the 1 hour or to the R1. It's pulling back now. I think we've still got further upside on that, so we'll see how that goes. Who else is here already? Hangry Patrick, what's up, man? Bill is here, Hank is here, Beer is here. I'll leave the jokes aside. We're from Texas. We like some beer. Mark's here. What's going on, Mark, over there in Canada? Hopefully your day's well. Christopher, good to see you. Nevlusian's here. Let me see. Who else is here? Rasta, what's up, man? Cue the action checking in. Data's here as well. Andrew Bennett, good morning, sir. And Samir, my friend, good to see you. I'm having a great week. Thank you. As a matter of fact, I'm having a really great week. You guys know that these... anything with basically chips are, in shortage, right? Are in they're high demand, they're hard to get, right? So, if you go looking for, like, let's say one of those Kia Tellurides, right? I can't find them anywhere. Not even here in San Antonio. And, we've got multiple dealerships around here and everything. Can't find them. And apparently whenever they come in, usually they're pre-ordered. And so then it goes with gaming as well. My son and my nephew are big gamers, and, we kind of game a bit. Been trying to get our hands on an Xbox X and a PlayStation 5 and all that kind of fun stuff. I was able to get him an Xbox One S, probably a week ago or so. But this morning, GameStop had a drop for PlayStation 5s. I was able to snag 2 of them. So, we got 2 of those there. So, yeah, this week's starting out pretty all right, pretty great. Now, if Bitcoin can get its little rear end in gear and pop on up, it'd be doing great, right? Or just go on down and let me short it, and we'll be good that way as well. Hey there, Michael. Good to see you. Let's see here. Chum in the water. What's up, man? F-150s parked size of football stadium sitting waiting for chips. Yeah, I'm telling you, man. Those chips are just, they've just, for everything. I was looking at maybe getting a new vehicle as well, and it's just not happening right now, which is fine. I don't usually get brand new vehicles anyway. But even the used vehicles. So like my truck right now, it's all paid off for and everything. It's gone up. Let's see here. It's got up about 20%. The resale value on it has gone up in about 25% since January. It's just absolutely ridiculous. Same thing with my car. So, it's crazy times, man, with this chip shortage going on there. So we'll see if it can, if that bottleneck can, clear up and everything can happen and get it back in. But, most everything we have today, guys, this is important for trading is, you look at these companies and some of them, you're like, man, how are they making money? They're not selling that much and whatever. And oftentimes, it's because their prices are raised, because the shortage of the chips there. So, basic economics, guys. If you've got more demand than supply, price rises, right? And it's the same thing we look at on the charts all the time. We look at it supply and demand. If there's more demand coming in than supply, price is going to go up. If there's more supply coming in, then price is going to go down. Of course, we're talking about market buying and selling here, not limit orders, but that's the way it works, right? So, yeah. Oh, the X actually does add a bit, Hank. It adds to the graphics, the way you utilize the graphics in there. So it's got true 4K. So if you're a gamer, it's good stuff. But also, more importantly, is it has the larger hard drive. And here's the thing I found out. By the way, if any of y'all are thinking about getting these, here's the thing. These newer games that are made for the Xbox S and the Xbox X, they require an interior drive that comes with it, or they require the you can get these drives that stick into the back of them. Not a regular external drive, but the drive that inserts into them in the back. Here's the thing about that. So those drives cost about $230, $250 for 1 terabyte. But you have to have those. I bought a 6 terabyte plug-in, external drive for it, and the new games that are optimized for Xbox S or X cannot play on that. You can download them to that, but then you have to move them to the interior drive or that slot on the back if you've got that extra card on there, and they have to play off that. So just a heads up, guys, if you didn't know that, I didn't know that. And that was like, wow, really? So, I paid, $150 for this 6 terabyte drive that I thought would be great. And now I've got to pay $250 for the card to slip in the back that's only 1 terabyte. It's ridiculous. So, yeah. The external SSDs do not work for the games that are optimized for Xbox S and X. Yeah, they don't work. You have to have the interior. You have to have either on the interior drive or you have to have that card slot in the back. So yeah, it's good times anyway. But it is what it is. So again, chip shortage everywhere, making everything kind of. Come on here, give me just a minute. Let me turn on the fan in here. Remote control there, get that done. But anyway, so yeah, we got all that. It's all good, right? Mark, what's up, man? You said the Honda, the 06 Honda is finally worth more than its weight at the scrapyard. Maybe it's the time to do it, right? Chum says, just sold his truck, paid $60K for, just sold it for $57K with 56,000 miles on an expiring warranty. Man, that's awesome. Congratulations, man. That's a good trade right there. Especially if you don't have to buy anything right now. It's great to be able to get rid of your used vehicle right now. Great prices and all. But if you've got to get a new one, you're going to pay, stupid, ridiculous, higher cost as it is on that too. So yeah. No gaming in a second. I was just pretty excited about that, get it for the kids, so they can play and have fun and whatever. It's good times. Hey, Mike, good to see you checking in from Florida. Let me see here. Moogs, what's up? Good to see you, man. Yeah, the swap with the SSD, the external SSD, makes it quicker. Sure. But you still have to swap it, and that's kind of like, ugh. It's like, for me, it's like, man, that's another step. What the heck? Anyway, hey, guys, listen, we'd love to have you join us over here at howtotradetowin.com. Man, you know what? I've really got to update this. I got to update this whole site, but we've got well over 100 hours of educational video content, 3 streams a week. All this for Tier 3 members. We do Wyckoff on Mondays. We do tips, tricks, and techniques, which are rule-based strategies, trading strategies there on Wednesdays that I teach. And then also on Thursdays, again, we do Elliott Wave. So a lot of stuff going on there, and of course, all the other stuff we have listed there. Join us. I don't see how you could ever be sorry doing it, but, some people get in and they want things still done for them. Guys, at the end of the day, I can't do things for you. You got to step up. You got to do things for yourself. All I can do is give you all this information and help you understand it, but, at the end of the day, it's up for you to actually do it. So hopefully you'll come in and hopefully you'll see us and hopefully you'll try it out and hopefully you'll be impressed. We've got a pretty great community. You see them checking in here, a lot of people. Moogs, you checking in from Stone Oak area, man? That's awesome, dude. Hey, listen, man, I almost moved over there rather than out here, Bernie. What's that community out there? I can't think of what it's called right now. They've got that guarded community out there at guarded and gated community over there in Stone Oak. I almost moved there, but I let my son decide, and he chose this one out in Bernie because of the view and the deer outside and all that fun stuff. So it is what it is. It is what it is. But love the Stone Oak area, though. A lot of nice place out there. Okay, so let's see here. Bitcoin. Here we go. Right now I've got this as a 3, 4, potentially a 5. I've got, maybe either an ending or a leading diagonal right here. And if it's 5, it could be the end of wave B. Remember, we're looking at this potential bearish count still as well. And if it is, that means it's going to go down, probably around 23,000 at least, maybe lower. But we'll kind of, watch it as it's going down and see if we can get a count as it's running down. But until it breaks down below wave 4 over here, this swing low at 36,413 and 26 cents, until it breaks down below that, there's still the possibility this is a leading diagonal. And so this is just 1 of 5. So that's this black count right here, this parentheses 1. And so right now we've dropped back, nailed the 78.6 exactly, pushed back up. And what we're looking for is a breakout of this descending channel here. Now, I've still got some hope for that potentially, because generally your ABC corrections most of the time will generally stick within the channel. It's when you get to the point you're doing a 1, 2, 3, 4, 5, it's wave 3 that breaks down or breaks out of the the channel, depending on which way the trend's going. So in this case, it would be wave 3 that would break down through it most often. But the fact that it's still sitting well within this channel, and you can see it here, hugging the mid-range here, gives me some hope that we may see it break out. If it does, based on the height of the channel here, you've got a $1,937.70 target above the point of breakout. And so that's going to be your first clue. That breakout there is your first clue that wave 2 may be done here. That should carry you above the pivot and looks like potentially above wave B here. The importance of wave B is, if this is an A, B, and then a C here, breaking out above wave B should add confidence to your count, because that closes this off as 3 waves down. And so then that would give us, based on the swing low right here, a minimum wave 3 target of 47,676, which was just below the secondary target here, which is the EQ here at about 48,365 or so of this supply structure. So really, we're just kind of looking at, as long as price doesn't go down any lower, we're kind of looking at this range as your wave 3 target here. So right now it's about patience. It's about, are we going to get the breakout, or is it going to break down here? Because if it breaks down here, this should lock this in as 5 done up here. Now, that doesn't guarantee that wave B is done, or that this is wave B. That doesn't guarantee it is. So what we'd look for, if this is 5 done here, and we want to still be bullish, we could see that as a wave 3 here. So this would be a 1, this would be a 2, this would be a 3. And so what we should be looking for here is this pullback toward the 38.2 to the 50 here. So this is this 36.910 to 35.318. If this is going to be 1, 2 as a flat, 3 up here right at the 1618, and then 4 pulls back to the 38.2, which is this 36.910, or the 50 here, which is the 35.318. From the point of this range right here, I mean, again, if we're looking at this, you've got your selling climax here, you've got your automatic rally, you've got your pullback here into a spring, you've got a show of strength, you've got a last point of support, show of strength, last point of support, show of strength up here. As you get this high volume, this large candle spread breaking out through this resistance right here. So this is your jump across the creek. The creek is your resistance. And so then you get this SOS, and you get this back up to the edge of the creek, which is what we may be getting here. So, I mean, again, at this point, there is no reason right now to be overly bearish. Could it be, bearishly be this, what we have this other count here, which is this move down is A, and then this is A, and then B is a flat here, and then C. So then we've got A, B, C is B. And then we'll have 5 down for C. Sure, we could. But until we're really kind of getting down below this 35.318 area, until we're really kind of impulsively moving down below that, I think, your bias remains to the upside potentially. Now, that doesn't mean you just go in and buy and whatever. You want to look for your entries. Now, if you were watching this morning, let's see here. You notice that we've got this on the 15-minute here. You notice we've got this bullish divergence which resulted in this large move up. And now we're kind of pulling back. But let me see here, this 4-hour turnout. 4 hour was looking a lot better earlier. We had a bit up here. It's kind of, it's really iffy now. No real about it. But, you know, especially if we're pulling back, if this is wave 4, that larger wave 4, then we might get a reset of the 4 hour into 4 hour RSI into oversold, which would be huge. That should really kind of set it up further there. You can notice right here that we bounced this morning right here around the daily pivot. So, you know, again, if you're looking, you know, we're moving in here between the pivot and the R1, moving in sideways. You know, as I often talk about, if we're not going to get up the R1 pivot and get rejected and then come down, then what we do is we come down to the pivot and we see if we get support here. If we bounce out and break out above the swing high here, that should have us running all the way through the pivots. So if we retest here at the pivot and then we break out above it, this should take us up to the R5 pivot, at least. If we break down, we've got a chance here at the S1, which is at 33,054. If we're losing that S1, though, I mean, you can watch, you know, your next target's going to be this swing low area here, but I think if we lose that S1, we're probably headed down toward, you know, S2 is right here around 24,638, maybe 23,000, just a bit below it, you know, at least, and then even potentially lower down here toward, you know, the S3 or S4 pivot even, depending on how that count comes down there. So right now, it just depends on what's going on with where we're at. That, I mean, that's what it comes down to at this point. Let me see here. 15-minute. Like I said, you had that bullish divergence coming up. Whoops, coming up off here. So we'll see if we can get this breakout above the swing high, which takes us out above the descending channel resistance, which sets up that further move up. But I mean, you know, I don't see any reason to enter prior to that, guys, because there is still a really good possibility that this could just be wave B, and then we're headed down quite a bit further. You can't tell right now either way. You got to get through some levels here, get something going one way or the other to kind of really be smarter about that entry. Crypto BTC Anarchist, what's up, man? It's 2 a.m. in Australia. Well, I'm glad to have you on, man. Andrew's saying Bitcoin on the daily, a bull pennant forming or too early to call? Let me see here. Yeah, so you're looking at this right here. You know, if I was to see this as you know, a bull flag, maybe something like this. Remember, a pennant is a triangle. So this is more of a flag. So I'd be looking at something like this right here, if that's what it's going to be. So we'll see what happens there. I mean, you know, here's the thing, guys. On the daily, if we can get a reversal off this daily, that's what we want to see, because that's the pivot right there. Moved in sideways between it and the R1. If we can test that pivot as support and break on out, I mean, that's what we need, and that's bullish as heck. I mean, again, this was my target range from down here at the bottom. You know, we almost went to the very top of that range. I'm going to get rid of that now. So yeah, maybe something brewing here, but we'll have to see. We'll have to see how it plays out there. Yeah. Hey Dio Red, is that it? Or Hey Dior? No, Hey Dio Red, I think is what it is, right? Yeah. You know, we'll see it definitely. I think as they continue to play out, I think, you know, the Xbox X will really kind of stand out. You know, more than the S. So we'll see what happens. It's just right now when you buy the stupid thing, you know, like I said, that S has that, I don't know, about 380 megs or 380 gigs of usable space. And it depends on your game. I've got I put a game on there that's over 100 gigs on it. So, yeah, you know, just depends on your game. Some of the games are pretty small, but other games are pretty large. Get you around 80 to 120 gigs. And that fills up pretty quick like that. At least with the X, you've got about a terabyte. So what, about 800 gigs of usable space, 850. So yeah. Hey there, Sylvia. What's up, man? He says, could this downtrend be the 50% retracement from 29.3 ending at 35.9? 29.3 at 39.9. Oh, this right here. ending at 39.9. I'm confused. Where are we at here? Because that would be down this area here. Wait, could this be the 50%? Be the 50% retracement for the 29.3, which I think you're saying basically is this swing low. Oh, this is Coinbase that has the swing low. There we go, 28.8 on Coinbase, and then 35.9. So that's this right here, right? You're looking about this area. Get the 50% retracement. I'm not sure where I'm following you, man. I think right now, again, we just kind of look at what I was looking at earlier. You know. Does it remain above this wave 4? As long as it's above this wave 4 swing low here, it still has possibilities that it could head up higher. But really, let me kind of get rid of this other stuff here. Oh, that's the, no, we'll leave that. But really, you know, as far as this goes from the wave 2 or wave B of B to the swing high up here, you know, again, guys, remember, this is 1618. This is what makes it so iffy at the moment, because if you measure this out, this is going to be a flat correction. Either way, whether it's a flat correction as B of B or it's a flat correction of wave 2, in either case, price went up here just about to the 2.0. That's pretty high. So, you know, usually your wave C's, you want to find them around, you know, about the equal to A. So that would have been, you know, it would have been closer to this area here. But, you know, when you're getting up to that 1618, or that 2.0, you know, that for me personally, I've always found that to be more of a clue that it may be headed up, you know, that may be a wave 3. And so, you know, again, when you're starting to get to these real big overextensions on wave C, potential wave C, you know, you got to start looking at that wave 3 possibility. So that's what we're kind of looking at here, because we went up there so high. But, you know, again, pulling back from that, if it is, then wave 4 again has that target of the 38.2 right here at 39.10, or the 50% at 35.318. And that would, you know, again, that would be this purple count that says 5 up is completed. But if we reverse prior to that 4 and break out above the swing high, that means this is probably just wave 1 of 5. And then that gets us that wave 3 up here, you know, in this green box area, right there around 47,630 or so to 48,360 kind of thing, to that range. So yeah. Hey there, Brian. Good to see you. Kimozabi says, any relevance to the monthly bullish order block? I'm not sure what you're talking about. What relevance? Is what relevant to it, I guess, is what I'm asking. Hey there, Niels. Good to see you, buddy. Good day to you, too. Let me see here. Hank says, is this right here the 38.2? Yeah, that makes sense. From the all-time high, that would make sense. You run into resistance at those fibs, at the 30, especially 38.2 and the 61.8. So yeah, that would make sense there. Is that Wallen? What's going on, man? Good to see you. Telluride, what's up, buddy? Yeah, there's always something that fits into the dot, right? Go Lives Matter. How are you doing? Good to see you. Let me kind of catch up here, see what else I missed, maybe. Moogs, you almost moved to Bernie? It's such a nice area out here. Anybody that's been in San Antonio, they'll tell you if you've been to Bernie. It's such a beautiful area, guys. There's so much German heritage around here, you know. Bernie to New Braunfels to Kerrville and Fredericksburg, that whole area there. All them German immigrants came in, you know, 100 years ago, 100 plus years ago. So yeah. It's nice. It's really nice. But anyway, that's what I'm kind of looking at here, guys. Really nothing difficult. You know, I'm looking for a breakout of this descending channel resistance. And if we can get that, can we, you know, get an impulsive breakout above the pivot here on the 1 and 4 hour at above wave B here? I mean, that all, you know, it's all feathers in your cap for higher up. If we do break down below this, you know, below this wave 4 here, then I'm looking at potentially 3 here and 4 done somewhere between this 35,318 and 36,910 kind of area. Now, you know, it could go, I mean, it could even go down low. Well, let me see here. No, it couldn't. See, I'm real iffy about the 50 because the 50 takes it back into the 1 here. So I would probably look closer to the 32.8 or 38.2 here and watch the higher volume nodes maybe below it. But if we're dropping, I guess if we hit the 50, we're dropping back into the 1. And at that point, I'm like, nah, probably going down further. So yeah. I mean, it would really have to break on up here for me to go, okay, maybe we're headed up higher. But, dipping down into that wave one, it shouldn't do that unless it's a leading diagonal. And with this, I mean, with this large, what do you call this here? Flat correction, I don't see this as a leading diagonal. Maybe it is, but I don't see it as that. So, I mean, I guess the other thing could always be you've got a 1-2 and then a 1-2, and holy crud, the bullishness of that. But the fact it's up to the 1-6-1-8, I would think it would be a 3. So again, we just watch the levels as it's moving. I mean, it really is as simple as that, guys. Don't make trading any more difficult than you have to. Just because you know how to do a thing doesn't mean you need to employ it. You got to, part of trading is learning, especially if you know how to do multiple things, is learning when to employ them and when not. Sometimes, with our tier 3, we do the chart request. And sometimes they'll give me a chart and I'll look at it and go, man, it doesn't leave itself to an easy count. Is there another way we can look at it? Can we look at patterns maybe? Or, supply and demand structures or volume and price action, Wyckoff, something else that maybe gives an easier read of that. And I'll do that, which is why most of the time we'll have Elliott Wave counts in there, but a lot of the times enough times we'll look at something else just because it's more clear than what the Elliott Wave count would be. So it's always best to know, how to do that, guys, to remember to ease on out of the something that's more difficult. You shouldn't want to, I guess what I'm trying to say, guys, is as a trader, your time is your commodity, okay? And the last thing you want to do, I know it's cool and all at first, but man, trust me, when you've been doing this 10 years, 20 years, whatever, it starts draining on you. You just want to make money. You don't want to spend all day looking at charts. And so, you don't want to spend your time. There's so many possible trades out there, guys. Even just in one market. If all you're trading is crypto, there's 5,000 plus easily different crypto pairs out there you can look up, right? Now, maybe you're more limited if you live in the U.S., right? So it is what it is. But still, there's a lot of different trades out there. There's no reason to get souped up on just one. Find something that's easier to read and it makes it quick, that you don't have to spend all day, poring over it to figure it out. But then if you're, and if your equity's the same way, if your FX the same way, and if you're doing multiple markets, man, you've got tons of opportunity. Look for the easy trades, guys. Don't trade something that you want to trade because maybe everybody's talking about it, or maybe it's just something you have some heartfelt connection with for whatever reason. Trade the things that are easy to trade, guys. If you can do that, you're going to be so much better off. You're going to be so much happier because it's easier money, less mistakes, quicker trading. It's all these things that you want, and a lot of what not a lot of what you don't want as you're doing there. Let me see here. Interesting to see how new regulation and legislation affects markets in the next short while. Yeah, SEC saying, hey, we're coming out here with some more regulations and whatnot. People misunderstood on Twitter when I wrote that in there. They were like, well, what? I thought that was a good thing. Well, it's good for institutions. Something I've been telling you guys for a few years now. This larger money, they have a lot of times legal obligations and legal limits to what they can do. They need clarification in regulations before they can get in. So in terms of institutions, more regulations with anything, more regulations are better for bigger money. Often it's the opposite effect for retail. Again, you can't invest in a hedge fund here in the U.S. unless you're a qualified investor, which means a lot of money, right? I mean, 6 figures, basically whatever. I don't remember what the limit is right now. Was it 250 or 300,000 over the last 2 years? Net worth of $1 million plus minus your personal residence. These are ways you can become, be considered a qualified investor. But if you're not, you don't get to invest in a hedge fund. And don't think for a second that they don't think, that they might not do the same thing for crypto. This is something I've warned about. I don't see anything in the horizon just yet that says they're going to do it, but it's always a possibility, guys. And then the big money gets in there, and guess what? It's all for the big money. Nothing for you. Doesn't matter that you're in it right now, and force you out of it. So yeah, regulation's good for the big guys, not necessarily good for the smaller guys. It's going to include KYC, AML everywhere. You guys don't like that. It may include, depending on what agencies get involved in how it's all going about, or if legislation is passed by Congress, you could be looking at larger, problems like, the exchanges have to report to the IRS or something. I'm not saying it's going to happen, but these are all possibilities always. Especially because you got those idiots like Elizabeth Warren out there who are like, oh yeah, there's so much of this bad stuff done with crypto. The dollar's still the leading terrorist funding mechanism, if you guys didn't know that. And illicit business and whatnot, Crypto is just like a very tiny bit of this huge thing, which is basically led by fiat, most especially the dollar. Why? Because the dollar is so widely accepted, reserve currency worldwide, all this stuff, so. But that was what I meant with that when I put there. All right, Kimosabi, what's up? You said relevance as in retrace levels to watch that would have confluence in the counts. Yeah, maybe. Did you say that was monthly? Yeah, so you're looking at this right here, this candle spread here in June. Yeah, quite possibly. Right here, this right here, as I talked about before, on a monthly basis, this is a good start to a potential reversal. You got this rounding bottom here, large lower wicks. You've got this small candle spread, and then you've got this large bullish engulfing candle spread following up after it, right? And of course, you see the volume here. The volume's dropping off as you're getting down there. But even though the volume dropped off between May and June, June was about, I don't know, probably about 2/3 of that volume maybe. But look at how much smaller that candle spread is. So you still have elevated volume and decreased candle spread. So you still have, even though there's less volume overall, there's still more effort versus results in the June candle. And what that means is you've got supply exerting more effort comparatively and getting much less result comparatively, which is usually the sign that, that you're getting some sort of bounce at least, if not a reversal. But we need to see follow through with this next month now, because we get that, and then we have the bullish engulfing, and that's a potential, it's a pause, potential reversal. We need to see follow through this month. So, from a monthly perspective, expect resistance around the 46,100, 46,200 kind of area. Right here where these candles split, and then right here where you get that support. It's 47,140, it looks like. And then the lower end here is, what is that? 45,231. So that kind of $2,000 area there. Watch for resistance there on the, in the bigger picture. But if we can break through that, we should be running all the way up to the top here. And my thought is, if we're getting up here, that bottom's in, we're heading up. And we might have a wild and crazy Q4, maybe. But it's got work to do. It's got to get there, guys. Don't think you're going to buy right here and just assume it's going to go up. Diamond hands, I'm going to be honest with you guys, and I hope none of y'all take offense to this, but if you do, check yourself. Understand why you're taking offense to it. The term diamond hands is about the dumbest thing I've ever heard as a trader. 25 years. All that means is you didn't get out when you should have gotten out. Because otherwise, you're an investor and you weren't going to sell anyway, right? Why make a big deal out of it? People who claim diamond hands are those who are scared and they just let their fear, they didn't sell. And they got lucky. They got lucky because price ended up going back up. That's going to happen until it doesn't anymore. And when it doesn't anymore, diamond hands ain't going to mean scrap, right? Don't get caught up in the diamond hands nonsense, guys. It's the dumbest thing out there right now on crypto Twitter. You guys are better than that, okay? You are definitely better than that. Don't get, suckered up into that. Because that's what it is. Because if you're an investor, you're not planning on selling just because it comes back anyway. The only people who make a big deal out of it are people who want to be traders and they were scared. And they were hoping it was going to go up. And then it went up and they breathed a sigh of relief. And then they're going out there, like little peacocks butting out their chest, batting their chest around and whatever. And it's just silliness, guys, okay? I keep telling you guys, don't get caught up in what's going on with the nonsense in social media. It'll cause you to lose. It'll cause you to lose money, man. I'm telling you guys, okay? Let me kind of catch up with you. Chum is saying Ethereum had 13 green days in a row. Wow. Let me see here. Let me see. How are the new glasses? Yeah, they do. They do help me a lot. The one thing I'm finding out about glasses is you got to clean them all the time. That's annoying to me. I'm not a big fan of that. That irritates me, but whatever. I'm going to hire somebody just to clean my glasses, right? Man. Hank says it looks like the bump and run we had after the dump to 4K. What looks like the bump and run? What time frame are you looking at? What days are you looking at? Let me know. Let me see here. Let's see here. Telluride says, give a small boy a hammer and he will find that everything he encounters needs pounding. That's right. If you're a hammer, everything's a nail, right? Think about that, guys. If you've never heard that before, think about what that means. If you always see the world in one way, if you always see it that one way, basically as a hammer there, then everything is going to, you won't allow yourself to see anything else, any other way of accomplishing something, of doing it than that. Let me see here. Kimozabi thinks, the Bitcoin's monthly has been showing absorption. Yeah, we'll see how it plays out there for sure. Definitely don't want to jump above ourselves, but it's looking pretty decent at the moment. So that's why, I've been telling Discord, like, listen, guys, we've been looking at possible maybe bottoms along the way here, but ultimately it's been, you just need to break out of this channel first. That's the first thing we need. If it's not breaking out, I really don't see any reason to jump in until it does. Above there, maybe. Oh yeah, man, crypto is easy to trace and track. Yeah, that's been my big complaint, or my big thing I've been talking about for the last few years. Yeah, everybody came in thinking that crypto was really anonymous and whatnot, and it's not. It's digital payments. They just got to figure out who you are, and that's not too difficult these days. But all the transactions that are on the ledger, easy to follow you around. A lot easier than me walking up to you and giving you $100 or something. All right, I could walk up and give you 10 grand as long as I didn't pull it out of the bank as 10 grand or even 5 grand. And as long as you don't go put it in the bank, nobody knows what's going on with that cash. I could pull out $100 a day for, a year. Right? Make, $100 a day, 365 days a year, $36,500, and just give it to somebody. As long as they don't put it in the bank, there's no tracing really going on about that. Now, the fact I'm pulling out $100 a day may raise some interest. But, again, here in the U.S., banks, they're required to report to the IRS when you deposit or take out more than $10,000. They're strongly encouraged to do so at $5,000. It's their attempt to track you. It's so much easier with crypto. This is a no-brainer that, we talked about a few years ago that all these central banks create their own cryptos. It's so easy. They'll tout it as, we've got this easy way to give y'all money now. Easy way, we don't have to send it by check. We can just drop it in your wallet, right? That's the way they're going to get everybody suckered into it. But then it just becomes easy tracking. And you say, but Chris, man, if you're not doing anything wrong, you don't have anything to worry about, right? Wrong. Privacy should be default. It shouldn't be required that somebody has access to everything you're doing in your life, guys. Okay? Because I'll tell you what right now. If they do that, they're going to find a reason for you to be in trouble for something. All right? They're going to find a reason. They have all this information. And maybe they won't necessarily be trying to find a reason to make, like, oh gosh, I got to find a way to, that this guy's guilty of something here. But when you have all this information and if you're a hammer, everything else is a nail, right? And this is what we often find with law enforcement. Is that detectives in law enforcement, right? So, I've been to law school, right? I've got a law degree. I'm going to tell you right now, and this is not legal advice, this is just common sense. You don't talk to the police. You don't say anything. You get a lawyer. And you go, oh, but they're going to think I'm guilty or whatever. The odds are they think you're guilty already. And anything you can say, no matter how harmless you think it is, can be twisted around in some way to make you look like you're guilty. This is a big problem in positions of power. And so I'm not saying don't work with the police or whatever, but I'm saying make sure you have a lawyer there, because the lawyer is going to listen, get scared. And this is really bad, if you're people of color, if you are in that other, what's the term? Minorities. It's really bad with it. It's a real big problem here in the U.S. This is just extrapolated. I know some of y'all are maybe really all about government, whatever, and you're like, yeah, whatever. Whatever. Do what you need to do. But at the end of the day, this is the way power works. And so when it comes to crypto, they make, Warren and all these people make all this big, oh gosh, it's so bad out there and whatnot. And yet it's really just a small bit in terms of illicit activity and terrorism, financing, maybe stuff like that, compared to fiat, and especially the dollar when it comes to fiat. So it doesn't make a lot of sense. But as with everything else, guys, with government, it doesn't have to make a lot of sense. They have to get on your feelings. That's all it is. Everybody votes on their feelings. Oh, I feel this isn't right. I feel this isn't fair. And that's why we end up with a bunch of cocky pop that we have. But anyway, guys, I got off there a little bit there. So when people are saying something's going directly to the moon, step back, guys. Don't listen. That'll get you hurt a lot more than anything else. Diamond hands are not nimble hands. Let me see here. Yeah, where's this Che coin stuff? Somebody says something about it again. Let me see if I can pop him out of here. Trader XO, what's up, buddy? He says, man, time flies. I reminisce about the 2018 July-August live streams. Fun times. 3 years later, man. No kidding, right? It's crazy, man. It's crazy. I appreciate you stopping in as always, man. I hope you're enjoying this trading right now. Let's see here. Yeah, and Hank says, a simpler problem is I can trace what you do with every payment I ever made you in crypto. Nobody wants their wages in crypto. No privacy, and employers can trace your spending. Yeah, again, guys, the idea of the privacy is because if the less information somebody has about you, the less they can come up with things to do. It's people that are in positions of power, whether it's government or companies or whatever, having access to information, it's too good to pass up. They want to do something with that. And all of a sudden, they start going, okay, well, I'm going to pay you in my payments. Look at this, guys. Think about this. You go and you say, yeah, I want to get paid in Bitcoin. Your employer says, yeah, we'll do that. And the employer starts tracking what you're buying. And you're starting to buy stuff. You're like, oh, I'm not going to buy stuff. Well, maybe you might one day, right? And you start buying stuff. And they see, oh, you paid for your pharmaceuticals on there. I'm not talking about illicit pharmaceuticals, guys. I'm talking about your crazy pills, right? Yeah, maybe you got some Xanax or something, right? And I said that. I'm sorry, guys. That was really rude and disrespectful. I didn't mean it that way. I just meant if there are, medical reasons for pills that you have to take, and all of a sudden your employer sees that you're taking them, and they find a reason to fire you now because all of a sudden they feel that you're not capable of doing your job. Now you got fired because of something that they didn't know about until they were able to track what you were paying. And now that's a pretty extreme thing out there, but I guarantee you guys, that's going to happen. That'll be happening when all this stuff, crypto really goes mainstream. You've got these central bank coins and everything. That's what's going to happen, man. Stuff like that's going to happen left and right. You're going to see it. I'm telling you right now. But these are a lot of things that people don't necessarily think about, but you need to think about. Hank brings up an awesome point there. It really is. Privacy should always be the default, guys. Okay? If it's not, you open yourself to a lot of potential issues. Again, when there's access to information and people have access to this information, they're going to do something with that information. And most of the time, it's not going to be something that you want done with it. Anyway, so there we go. Yes. Also see if you're receiving stuff, Mark. That's right. That's right. Bill says there's a great film on Netflix called Chaos, where they hacked a bank and took 100 a day out of millions of accounts, walked away with over $1 billion. Not advocating anyone try this, but it was a great film. Black Man's Guide to Bitcoin. What's up, buddy? Good to see you checking in. Let me see here. Jason, what's up? He says U.S. stablecoin regulations, regardless if they are right or wrong, are the biggest short-term risk for crypto. Again, guys, regulations are regulations. Regulations and licensing are barriers to entry. Okay, that's what you need to understand about them. In their the most thought about basic thing, regulations and licensing are barriers to entry. They're made to their result of creating them is that people then have whatever their license or whatever they're in that's regulated is worth more. They can charge more. They can make more. That's what it results in. So yeah. Let's see here. Let me get here. Let me see here. Mark says, we know you didn't mean that comment with ill intention, but your moral compass is very strong. Yeah, I appreciate that. And a lot of people, we get new people on here sometimes. They may not know me. And, regardless of whether you know me or not, that was a really poor choice of example there, poor choice of words that I used. And I really do apologize, guys. And I'm not normally one to apologize about things that hurt people's feelings. But in this case, it's not about it hurting somebody's feelings. It's just about it was inappropriate. It really shouldn't have been said. So I do apologize for that. Let me see here. Okay, so this is what we're looking at with Bitcoin here. We can jump over to the dollar, guys. Dollars moved down here. Potentially, we've got this maybe. We've got a wave 1 coming off the bottom here. Then we've got potentially an ABC here for a 2. And if so, then we've broken out above wave B. And so we're just looking for a continuation above wave 1 and breakout through this. Again, descending channel resistance here. And once you do that, you've got this pattern target still of 0.783. If this is wave 2 here, we've got a minimum wave 3 target up here of 92.572. And then wave 5 heads up just a bit higher there, right below the R1 pivot on the 1 hour time frame there. But really, if this count is correct, we've got an A up here and then a B, and then we've got this big C here we're working on. But we really need, we're going to need some further upside. We need to break out of this swing high up here. Until we do, there's still the possibility that this is just corrective in here and we're heading down. We really need it above this one to lock in that possible double bottom here. Let me zoom out here a bit. There we go. Possible double bottom here on the potential macro reversal. If we break out above this swing high, that gives us this pattern target up here of 97.626, which again takes us above my wave 4, which for me then is the first real clue that bottom may be in. And so then, that starts to make me feel a little bit better about it. Right now, we're still sitting below it here. But you expect to get this, you expect to get rejected right around this area at this swing high. So pull back and go. Now, here's the thing. Locally, I've got this as a 1-2, 1-2 potentially here. And that's a pretty deep 2. It's coming back, right into here. So if we do end up dropping down below the swing low there at 91.513, that'll invalidate the count as it stands, and then we'll have to look and see, okay, do we maybe have 5 up here and then have it, or is there just no way and we're dropping back down to Hank's low to mid 80s that he wants? Maybe there. We'll see. But if we do break out above, this swing high here, then we should break out above this one, which means we should end up above the wave 4, and things start looking a lot rosier there. That moves in with the with what we're seeing in the repo markets, guys, the reverse repo. I mean, we hit $1 trillion in that. And again, I keep posing this question to you. If the economy's doing so well, if things are going so great, then why are the banks not lending out all this money? Why are they choosing instead to send their money to the reverse repo overnight and make that tiny bit of interest there. There's something going on with the banks. And remember, it's at the bank level when the bank creates loans. That's where you get inflation in your money, as far as where it goes, where it affects you. And you go, but Chris, we already have inflation. I said, yeah, but it's bottleneck. It's production inflation. Slowdowns there, less of a product, higher demand, less supply, higher prices. It's not inflation there. It's just a rise in prices. Because remember, only the money supply can inflate or deflate. It can, the increase and decrease. Price doesn't, there isn't more of prices created. It's just that the price level itself increases or decreases. But it doesn't inflate or deflate. So, again, guys, QE is doing what it was meant to do. It pops up the value of assets, right? And so in doing that, it makes companies look better. It makes people feel better about the economy. And so the people are out there, then they're spending money. They're taking out loans. They're extending beyond what they should. And that creates, and then that's where the banks go, and that creates inflation in that. But if you've got the opposite, if you've got people paying off loans, like I said, that's disinflationary at the least, potentially deflationary. On top of that, if you have, a decrease in the amount of loans that are made, that's also disinflationary or potentially deflationary. What's going on with the Fed? Like I said, most of that money sits in the Fed's vault, and it's for the banks to reference it so that they're staying with the laws, that they have enough reserves on hand to make the loans. The idea is to increase to get the banks to make those loans. That's the goal. That's what what the Fed's trying to do. But the banks are like, I don't know, man. Let's make credit a little bit more difficult to get. We don't like what's going on here. But we got to do something with it. We're liquid. We're cash rich. What do we do with this cash? So they send it to reverse repo because they're not getting paid anything with the money markets, right? And so that's what's going on there. They're not the Fed isn't seeing this huge increase in loans that it wants to see from the banks. So the other little bit of the money that comes out of the Fed ends up just going to your primary dealers, which just becomes an asset swap with treasuries, which is really nothing more than a ledger move. It doesn't actually enter the economy. It doesn't actually enter out here and circulate. And that's what's going on there. But it's easy to say, oh, look, the Fed's printing all this money. Prices are high over here. So prices must be going up because there must be inflation because the Fed's printing that money. But if you don't understand what's going on there, it's an easy, mistake to make. But it's prevalent all over social media, right? Let's see here. So yeah. So this is the DXY right here, as we can see. And again, remember, as the DXY rises in value, that's going to put downward price pressure on things that are denominated in dollars, okay? Again, just because the DXY is rising doesn't mean that things have to drop down right in line with it. So if this is dropping here, it doesn't mean everything else needs to rise during this time. You're looking for the larger time frame correlations. You're not worried about what happens on the 5 minute or the 1 hour. Unless there's a strong move up. Often if there's a strong move like this, you're going to see a resulting move to the other direction in your other assets. But as long as just general moving up here, because what can happen here is you've got this move down, and you can have, let's say Bitcoin, move up at a much greater percentage. And then so when this goes back up, Bitcoin could fall at a shorter percentage rate than what this is rising at. And so at the end of the day, Bitcoin still overall ends up rising, even though the DXY is rising. But then that only lasts so long. At some point, it comes to a head, and then, DXY continues up, and then Bitcoin really kind of takes its reversal. Which is how you could get the DXY rising into the end of the year, and Bitcoin still doing a Q4, kind of like what it did in 2017, potentially. So, don't think that just because it's going up there, immediately price has to do the other thing on other things, and, that they have to necessarily be trending down if it's trending up. It's not a, immediate correlation. All right? There's more into it than just the value of the dollar. Okay? But this is a big part of it. Let me see here. And so we've got that, and then let's see, a TLT. These are our bonds. We were watching for this breakout here of this ascending triangle. I've got a pattern target up here at around 152.12. As a matter of fact, let me see if I've got my chart here. I do have a TLT chart with the other stuff on it. There we go. Yeah, here was the chart we had for Discord and everything. Potentially a 1-2 here, and then a 3 up here at around 160.35. Other possibility is this is an A. We've got a B as an ascending triangle. We'll have a C up here, and then we'll break down, finish further for 2, because this is just a short pullback right now. So this could be a 3, 4, and a 5 here, rather than what would end up being much further up here. As a little bit further above that wave 3 if it does play out. But this 5 up could be 5. And this could be a 1, and then we'd be looking for a 2 on a pullback, in which case we would see this C price break down below the triangle there. And then we'd be looking at A, B, and then C kind of coming down here. I guess this could potentially, I don't know. The big problem is this big gap in here. So trying to figure out if we've actually got 3 or 5 down. Like I said, there's a 1, 2 there. And then a 1, 2, 1, 2, 3, 4, 5. So 1, 2, 3, 4, 5. See, so it looks like an ABC right here. But when you've got this here, you have to be prepared for maybe it's actually a 5 down. It could be. And so we had this this island reversal here. And it's an island reversal because you see the gap prior and then the gap after, and they gapped at the same area. That creates this island here. So that's an island reversal, but there's no follow through. It just basically hits the swing low over here. Boom, comes across sideways, works its way up, and bang, breaks out. So, yeah, we've got that going on there. So no follow through on that island reversal makes me think that there is some possibility that we could see this be a 1, 2 here and heading up. This would be a 1, 2, and then a 3 of the wave 5. Remember, as TLT is rising, that means people are more fearful of the market and what's going on. So they're getting out of their equity positions and getting into bonds, long-term government securities, which are the safest thing out there. And so that's what this would suggest. This whole move up here, people are becoming nervous with the market. So as this continues higher, we should see more and more problems with the market. So if we check out the market, then we go, well, yeah, that makes sense. Where's my market stuff here? So then you can see kind of like what's going on with our indexes now, right? And so if we look at the E-minis here, they're being kind of a pain in the rear end. Let's pull this up here. But I think we may have a 1, 2. We've had to go through a couple iterations of what may be going on here. I think we've got a W, X, and then Y coming down here. 1, 2, 3, 4, 5. And so we were looking at either a reversal off the S1 or the S2. We might be getting off this S1, it looks like. And so, if this is just a 1, 2 off that, we can look for, the E-minis here to, head on up here toward 46, 78, 75, potentially, if we get a full wave 3 extension up there. And then it would give us a wave 5 up here, 47.53. So just looking for a breakout above wave X to kind of add confidence to this count here and see if we can't get it up there. Hey there, Bianca. Good to see you. Let's see here. Let's see what's going on here. So we see that now. The one that's taken a little bit of a wallop here is the Dow Jones. So remember, the Dow Jones is much less tech heavy than what you had on NASDAQ, which is really tech heavy, and the SPX, which is pretty tech heavy but not as big as NASDAQ. So you get your Dow Jones, which is a more broad-based index, right? And so we took a little bit more of a hit down here. Looks like we got 1, 2, 3, 4, 5. Looks like we're probably done. 1, 2, 3, 4, maybe a 5 coming up toward the range high here. Or it might break out a bit higher and get to this wave 5. So right now, based on this as a 1, 2, 3, 4, we've got a minimum wave 5 here at 35,260. And then a secondary target up here at about 35,402, which is just almost at the pattern target, which is based on the height of this range here. And that's up there at 35,424. But if this is 1, 2, 3, 4, 5 coming out of here, so it's just wave 1 of 5 here, potentially something like this, then we could see 5 going all the way up here toward 35,775 or so. Potentially something like that. So we just got to see how this plays out. But right now, minimum secondary targets right where they are. And then potentially, again, seeing if this is 5 up and seeing what happens there. Could always be an ending diagonal, right? Could get an ABC as 1, 2, ABC is 3, 4, ABC is 5. Just get an ending diagonal there. So we'll have to see how it continues to play up here. But targets are pretty easy on that. Let's see here. Our mods don't have any egos over here. They just know the way it is. I've been talking here, so I haven't been paying a whole lot to look at. So I've got people who are brand new saying the mods ruined the channel. I don't think they have. So I trust the mods. They've been around. They've been watching me for years. They know what we expect here. Shilling is not acceptable. We're not here to look at what you want to get other people to buy. We're here about learning how to trade, right? I mean, if you don't like that, move on. It's as easy as that. But, you're the ones acting out of line here. So, yeah. Yeah, I think they're trolls. Yeah, they seem like. Good, unsub. Have fun, Excedrin. Don't let the door hit you where the good Lord split you, right? I appreciate you guys, mods. Thank you so much for helping out on that as I was talking here. Like I said, you guys have been around for a long time with me, and you know what I expect from people that are watching along, right? We're actually a pretty great group of people, very welcoming, but it is what it is. Let me see here, oil, man. Let me talk about oil real quick. Again, I'm from West Texas. Oil's a big thing, man. Oil kind of doing its thing here. Dropping off there a bit. Yeah, look at that. So we had this move over and then a big drop, bounce up, and another big drop and bounce up here. Looks like we've got some small bit of bullish divergence here on the 1 hour, which is preceding that pop up there where it caught that bid. What is this, 1 hour? And let's see. Yeah. And so really, I think, if we're looking for wave 2, if this is wave 1, if the count's correct here, and what I think may be, which is this, we've got this 1, 2, 1, 2 here, then this interior wave 1, this wave 2 is likely to target the wave 4 here of the lesser degree, which is right here. It makes a lot of sense. It's right here at this high volume node. If we're popping up above that, it doesn't mean that the count's incorrect, but it does mean you should watch, because that's a pretty decent sized high volume node there. If it pops up through that, I'm looking at this node right here around the 78.6 area, just above the pivot, the wave 2. Swing high is that next target. If we're breaking out, if we do happen to break out here above the swing high up here at 74.23, that invalidates the count. At that point, I think we've just got an ABC down. And then this is maybe a 1, 2, work its way through 4, 5. And at that point, we can probably look for price to head up toward $88, maybe $90. And then we'll look and see if wave 5 is done. Wave A, wave 5 of A is done up there. But that's what I'm watching for. If we break down, though, below this swing low over here, this $65.01, if we break down below that, adds confidence to the 1, 2, 1, 2 here. Right now, if we can get a reversal for this wave 2 right around that S1 pivot on the hourly there, and we it carries down below wave 1 here, I've got a minimum wave 3 target of 63.71 on that. So if we can get that move up there and then the rejection in that area, and, if we get rejected around the wave 2, that means your wave, around this wave circle 2, the pivot area. That means this wave 3 will probably pull up right around this wave 1 swing low, this wave circle 1, or wave circle Roman numeral 1 here at around $65. If we make it up there, that's probably around where wave 3 will hit. But like I said, if we get rejected around this S1 and drop below wave 1 there, I think that gets us that wave 3 down here around 63.71 or so. At least, it could always overextend, head further, but that's where I'm going to look for it to go. 25 thumbs down. That's awesome. I think it's the most thumbs down I've ever gotten. That is awesome. Oh, oh my gosh. That's too funny. Let me see here. Let me see. Let me kind of catch up. Okay, so anyway, there's where we go with that. Let's see here. Silver. I know some of y'all are still hoping on that silver thing. Let's see here. Let me see. Let's leave here. There we go. So, localized count here, potentially wave 4 completed here, or wave 4 up here around the 38.2 at the high volume node. We have had a breakout of the descending channel resistance after testing the pivot as support. Looks like we tested the resistance as support here, which gives us a pattern target of about 25.855. If we break out through the swing high, we're going to look at this area right here. That's the 1 hour R1 pivot at about $26.10 to around $26.22 at the 38.2 for that wave 4. If we can get up there and then drop down below that swing low, that should indicate that we've got wave 5 in progress. Probably down here around 23.65 to 23.80 kind of area to get that. Now, remember, the bigger picture, this is just local here, and this is based off the possibility that the top's in. But remember, the other possibility is we've got an A, B, C, D, and then an E here for a triangle. So what does that mean? And that would just be here, and then we'd go up to probably like $35, $36 maybe, okay, to finish off, and then we'd come down. But if we drop below this swing low here, this wave C of that possible triangle at 23.74, so $23.74, if we drop down below that, that invalidates this triangle. Now, that could then mean that we have an A and a B and then an A, B, C as a C, which would just mean more sideways for months on silver. So really, the immediate triangle is invalidated on a drop below this low right here, on the drop below this 23.74. But overall, if we get a drop below this swing low over here, this is wave A of what would be a triangle, of all those triangles, at $21.81. If we get below that, then there's no triangle there at all. Not the one we're looking at right now or the potential larger one. Nothing. So, we'll see what happens here with this. So we are still kind of watching that on that larger time frame. But again, locally right now, it's still kind of, playing out with the count as it is at the moment. So we'll see if that continues here. Continues to take it lower there. But, if that's breaking down below the wave C and potentially at wave A, again, that's a big side for precious metals. And, of course, just commodities in general, tend to get a lot of their movement overall based on how well oil's doing, right? So if oil continues to pull off and reverse off what it's done at the top there and continues lower, I don't see any reason to be overly excited about gold and silver and other precious metals at the moment in general. So, yeah. Oh, let me catch up here, guys. Oh, sorry, I got to get something to drink. My throat's killing me. Let me see here. Let's see here. All right. let's see here. So that's what we've got there. Let's see here. I'm still trading the USD against the Canadian dollar, and did good. Did well overnight into this morning. Got out around 62, 63 pips. It continued up after that. It happens sometimes, but nonetheless, worked out all right. Let's see if we can get this here. Let's leave. Zoom out here to the 1 hour. So, I mean, we've had a great move up here. No confirmation that this is an ABC. I think it probably is, but we need a breakout above wave B up here, which is right around 1.26041. 044. 1.26044. So, if we get a breakout above that, that should confirm this as an ABC, and then we'll be looking to head up. Right now, sorry, my mustache is tickling my nose. Sorry about that, guys. You have to trim it up. We've got a 1 and a 2 here, and I think that's going to give us a 3 up here at around 1.26182. Locally here, if I'm looking at this, I'm thinking we got a 1, 2, and then 1, 2, 3, 4, and so that'll give us a 5 right here, 1.25931. So then that'll be a 1, 2, 3. Pull back for a 4, and then that'll give us a 5 up here at our 3, which gives us that 1, 2, 3. And then, of course, you pull back for your 4, and your 5 we might have seen an overextension on a 5 then that hits this R2 pivot right here at this previous cluster of activity. I don't see any reason for wave 5 to end anywhere in here. It should be like a last, kind of like this right here, probably coming out there. So that's what I'm kind of looking at. So basically, if this bottom's in here, looking maybe something like this. So that gives us the 3 and the 4 and the 5, which gives us this 3 and a 4 and then a 5 up here. And then probably ends up being like a 1, 2, and then works its way up here. But, again, we need to get a breakout above that wave B over here, this red line, to kind of say, okay, we've got 3 done. As you can see, if we end the 5 up here at the R2 pivot, that gives us 1 wave up. The 38.2 is right here at the high volume node, right here around the R1 pivot. So that makes a lot of sense to me. I mean, we could continue back to the 50% a bit lower there, 1.25507. But I think somewhere in that area would probably, I don't see any reason for it to come way back here to the pivot. And then, let's see here, if we can get that real quick here. That'll give us a wave 3 up here about 1.29960, and then a 5 up here, 1.30955. And then that'll, again, this will be a potentially, I've got 2 counts here. It'll either be a larger wave 1 and 2 or an interior wave 1, 2. But in either way, we'd look for that move up there. That's what I'm kind of looking to play on this. So we'll see if we get the break up from where we're at right now, to kind of keep this intact here. Kind of keep this move. You can see right here where this resistance is. Maybe you can see it here on the 1 hour. Say you've got this wick right here, and that gives us that resistance right there, which just happens to be support right here. So again, that reversal off that would be some good follow through on that, to potentially get up there. Jump in the 15-minute. Potentially ABC down, ABC up, and then working with 5 down. Zoom into the 5-minute there, see a little bit better here. See, ABC down, ABC up, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, ABC. So we'll see if we can hold this low and move this up. You might be able to get you some long in there locally here. Wave 3 right there, 1.25657, and then 5 up here, 1.25716. Basically you could get in right here. Your stop loss goes right below the swing low here. Goes right below 1.25410. So you can put it 1.25409 if you want. Because if this drops down below here, then it kind of invalidates what we're looking at here as far as the count goes. We have to figure something else out. But it does look like a flat correction coming in here. But you're going to need to see some fall through up into, we got rejected right here at the ascending channel resistance right inside the this channel here. If I'm looking at that, though, I could say, oh, well, maybe we've got a spring and then a test. And so the volume is much less here versus here. Not much less, but wait, let me see. Yeah, it is. Yeah, a little bit. And that's what you want to see. You want to see less interest when you come back down off that. So if we go back in here, see this moves up, and then we've got this one here. So the 10-minute, that's looking kind of good there. With this one for the reversal, and then this right here with the potential reversal coming in on it. As a matter of fact, gosh, give me just a minute here, guys. Whew. Got to get better with those glasses there. Let me see. As a matter of fact, you know what? I think I'm going to go ahead. It's possibly a double bottom forming here as well, which means I'll break out through that swing high. Gives you a target about 15.5 pips above it. So it's up there around 1.2570. I'm going to go ahead and go long on that right now. So I just went long on that, looking for this potentially to be the count and looking for those larger targets there. But we'll see. I'm probably a little bit early, but stop loss sitting right below the swing low here. So if it breaks down below that, I'm out. But if it continues up there, it's a pretty good, pretty good entry area right there. So we'll see. Let me see here. Kind of catching up with you here. Let me see. The bump and run is an actual thing. Yeah, it is. Pattern. Can't explain it in chat. I'll show you how a bump and run looks just like this. You have price kind of following along here, along this support. Bump. And it goes up, boom, bang, and then it takes off. And that's basically your bump and run. You go bump and run. So it kind of follows the ascending support, breaks off, comes back, breaks off a little bit, comes back to this bigger move, and then boom, takes off. That's a bump and run right there. Let me see here. Hank's got a chart in here. What does he got? Oh, I'm going somewhere else with that. Trying to see what you're doing there, Hank. I'm looking at your chart here in a minute. Yeah, yours is setting up something differently there. But I mean, I agree. Let me go ahead and pull it over here. I agree with your with the the interest in this level right here. You hit it. This is a bigger, it looks like a stronger resistance here. You've got a couple of touches on it. Third touch here, you pull back, find support of this previous area of resistance, and then break out. I mean, yeah, I can definitely see that happening. I mean, that's how you would normally expect something like that to play out. When you've got these multiple touches that line, it means it's strong. It means it's important. And so you don't usually blow right through it. You'll hit it. You'll pull back, gain a little bit more support, and then break through it. So, yeah, I can see that definitely possibly showing up there. See here. This might be more along the lines of a dragon pattern. You guys should look that up if you don't know what it is. But again, you have get the legs down here and you break out. So you've got your tail, you get the legs, break out with your head. Usually you break out, pull back, and then break up higher. Yeah. So yeah, I would definitely look for that. Hey there, Joy Bruin 1. Good to see you. When everyone is looking for the same levels to hit, for instance, Bitcoin, the 36,000 region, is it more or less likely to be true? Crypto Twitter is all over this higher low that's going to happen. So, in generally, okay, here's the best way to understand this. Generally, if the market players, the ones who mean anything, are in agreement about a level, then often you'll find that price may not hit that level. Yes, often you might see it get front run because everybody's expecting it. The problem is retail traders jump on crypto Twitter and other social media, and all of a sudden, they think, oh, just because they're all saying it, that it's going to, it's going to work the same way. And in that case, it's really not that that happens that way. It's this. Let me see if I can put it this way. It's the same idea that when everybody goes, they say, oh, well, everybody is bearish, so price is going to go the other way. And what you generally get is these retail traders who say that based upon their curated feed. And, the feeds are curated by the AI, the not so smart artificial intelligence that kind of just creates an echo chamber for you, right? Or kind of gets an echo chamber based on things that you've looked at. It doesn't mean you have to agree with the things you've looked at, but things that you've looked at and whatnot, right? And so they think, oh, well, everybody on crypto Twitter is bearish or bullish or whatever, so that means price is going to do the opposite. And that isn't how it works. That isn't how you figure out if everybody's bullish or bearish. It doesn't, for a large part, it really doesn't matter what crypto Twitter is saying, which is why so many people get caught then. They find out, oh man, it is, it's wrong. It didn't happen. But it is something that, yes, generally happens. My best way I can explain this is the DXY here. So if we jump out to the daily and we go here. So this is beginning of the year. So things about currencies, reversals, they usually happen, major currency, major reversals, macro reversals usually happen around January. And so this happens in January. At this time, I was talking about how the actual number of people who were bearish was very offside. The actual sentiment was very bearish. And we knew that because you could go look in the CME and everything, the futures interest there, and you could see. And so at that point down here, the bearish were like at about 92%. It was huge. Very little bullishness in there, right? And so when we talk about, the market's generally bearish or bullish, and then price will do the opposite if they're too far, too bearish or too bullish, that's what happened right here. And of course, we got that reversal off it. Same thing happened right here. Again, right here, we dropped down. I think it popped back up to around 80 or 85 here. And again, we got the reversal off that. So, these things are truthful, but you have to understand where to get your data from. And I think that's the key point there that most people are missing on that. So, if you're looking at 36, might or might not make it. Let me see here. 36 being this swing low at the bottom of the range here. But as you can see, we're hitting right here. We're basically hitting this cluster right here. And so 36 is the low of that cluster, basically, right below it. The EQ of the range. So, again, the best thing that you can do as traders is not to try and catch the falling knives. Let it get to those areas and then understand where it'll be validated that there's a reversal going on. And then buy in on that validation. Don't worry. Don't stress yourselves out about, is it going to get to 36? Is it going to be 36.5? Is it going to be right here? Don't worry about all that. Look for the validation that it's likely bottomed. And then buy that. You lose a little bit, but the odds are you're not going to buy the very bottom anyway. I'm telling you guys, I've been doing this a very long time. And 25, 26 years now. You're rarely ever going to get, you'll be lucky if you ever actually get an absolute low or high one time. But even just getting the very, very low range, you're still going to be extremely lucky if you even get that. This is why I keep trying to explain to you guys, this is a top. Locally here, this is a top, this range. This highest price is an event. Stop worrying about events. Worry about the tops. Worry about the bottoms. This is the bottom. This is an event, the very lowest price. Worry about the bottom. And if you do that, you're going to be a lot less stressed out. you're going to have a lot, you should have a lot less poor trades going on because you're not trying to catch those knives, falling knives or those shooting knives. Don't want to do that. Concentrate on your bottoms and your tops, not your lowest and highest price. Hope that helps, guys, okay? Hey, what's going on, Edward? Yeah, we had some spammers in here earlier, and they got all butthurt and did their thing. Hey there, TV Canal. Good to see you, man. So, Joy Bruin 1. I hope that made sense. I know I went a little bit extended kind of explanation there, but your question is a really good question because as new traders, you often see that, right? You see it touted a lot. You see people always talking about that. And so while the idea is correct, the way in which they implement it is incorrect. And so that'll make, as a new trader, you'll try to implement it incorrectly like they're doing, and you're going to get results that are mixed at best, and most often are worse off. And you don't want to do that. So yeah. Claudio, what's up, buddy? Good to see you checking in always, man. High or Low Crypto, what's up, buddy? He says, it's funny. I know I got lots of buddies here, lots of pals, right? I like friends, man. I know it's been mentioned it could go to 36K, but there are 2 or 3 other options when you're doing the count of what could happen. A tweet isn't enough information and leaves a ton of things out. Yeah. And this is, guys, unfortunately, one of the biggest things you have to understand as a new trader, and not just as a new trader, but new in anything, is that you don't know what you don't know, right? With trading, there's so much free information out there. But most of it, I would venture well over half of it, is either a half-truth or an outright lie. And I don't think, personally, that the people that are putting out there really are trying to just make things wrong for you. I believe that they believe that they're correct. But that doesn't help you out any, right? That doesn't make your trading any better. If you're following somebody who swears up and down this thing, and it's incorrect in the way they're applying it or what they're doing, or they're not fully understanding what they're talking about, it doesn't matter that they're not. It doesn't matter that they don't mean to be, wrong. Because if you're a new trader, you're coming in, and that's what you're listening to, you might believe that. Again, guys, I do my best here to help you understand these things from my quarter of a century here of doing this. But at the same time, I also don't want you just to blindly believe everything I tell you either. Don't get comfortable ever in life or, in trading or in life in general, blindly believing people. Look for a little proof. Look for a little, do a little research on your own. That's why I try to give you guys a lot of excess information. So that way it makes it easier to, if you want to verify or validate these things I'm talking about, you have information to Google with and to look up and whatnot. I'm not interested in telling you things to get you guys to lose money. I take this seriously, what I do here in speaking with y'all. And so I want y'all to be successful. But, again, I'm not a person that blindly believes anybody about anything. And I don't want you to be either. Yeah, it makes life easier until what you're believing is wrong and it causes havoc for you, all right? Hey, Block Tech, always good to see you checking in, man. Yeah, Hank, I appreciate the link there, man. Patternsite.com, bump and run, barrb.html. Yeah. Glad you put that up there. Yeah, and even sometimes with me, guys, I mean, I've learned a lot of things over, all these years. But it doesn't, I don't use all those things all the time. So I try not to say anything that I'm not really sure about. But every once in a while, I could remember something incorrectly. And, it could end up being wrong. So, always look it up. It doesn't hurt, guys. It's a little bit of time, a little bit of effort on your part. It's your money. Take it seriously. Have respect for it, right? Take care of yourself. That's what it's all about. At the end of the day, nobody you're listening to or nothing you do, nobody is going to enjoy your profits or mourn your losses other than you. It's you. So everything you do needs to be taken seriously with regard to who you are. Not worry about what other people are saying out there. Who cares? Bunch of yahoos out there, right? It's my favorite word lately, it seems like. Adam, you're so welcome. Glad for you always joining in. Again, guys, and most people, man, they don't listen in on my show, or they just quick glance because they're like, oh, it's so long and I don't have the time to do that. In life, guys, whatever you're doing, I think you just kind of put your time where it makes the most sense. And if you think that this is not the best spending of your time to learn to trade, it is what it is. Do what you need to do. But I'm going to be telling you, man, honestly, a lot of y'all are just in general, oh, I don't have time. You just want, maybe not you guys in particular, but maybe there's somebody listening in, and hopefully this will hit home. They're just looking for I can never remember the term. Sound bites. That's it. Sound bites. They're just looking for something quick. But the reality of it is, guys, you can't learn to do a thing well with sound bites. You can't. Okay? And, I take a lot of time out here and do this, and I explain things, and I do a lot of repetition and repeating things of the important stuff because it's important. And I know that most of you aren't going to listen the first time. And it's going to take 5 to 10 times at least to really get your attention. But these things that I repeat, once they're in your head and you're, repeating them along with me, you're in a much better position to trade more effectively. Guys, remember, at the end of the day, all this stuff that I teach, Elliott Wave, Wyckoff, supply and demand structures, volume and price action analysis, order flow, point and figure trading when we get that, options, all stuff. These are all just ways to trade. But at the end of the day, your biggest thing you're going to have to worry about, your biggest thing you're going to have to fight off is yourself. It's your emotions. Okay? That's always going to be the toughest thing. You have the ability to be correct right now, knowing very little. If you zoom out to a larger time frame, in general, you can figure out which way the trend's going, and you can be successful that way. Your problems come in when you become really emotional and you get in too heavy, or you buy or sell just because price moves suddenly. And that's usually where you guys end up losing your money. But in general, how many times have you gone in to make a buy and it's pulled back against you, and at the time it knocks you out, or you decide to get out because you're scared it's going to continue? You do, and then it turns around almost immediately and goes back up, right? And goes the way you were looking for it to go. You guys have that ability. I know it's happened to you guys. I know it has. Happens to you all the time, right? Probably more than you care to admit. It was the same for me when I first started. And so that's the reality of it, right? I mean, that's what you're trying to deal with, unfortunately. So it's not that you couldn't figure out which way price was likely going or what it was going to do. It's just that you didn't, you lost to your own emotions and your own psychology, in addition to not understanding real risk management and how you should properly manage your size and what size you should properly put in. And that's why I spend so much time talking about and reminding people constantly, here and in Discord, things we talk about. Because that's where you make your monies with risk management, guys. That's it. All right. Tell you right, you got a Yahoo? TWC bingo for you. Let me see here. Let's see here. Is that, I hope I say your name correctly. Is it Haidar or is it Haidar? Says, I had to learn the difference between investing versus trading. Yeah. Says, yes, I'm very new in the financial world. Yeah, everybody does. Most people, especially in crypto, what they mean when they say I'm a trader or I'm an investor, what they mean is I want to buy the very lowest price and sell the very highest price. That's really what they mean, because they don't really understand the differences between a trader and an investor. They don't know enough to consider themselves one or the other. What they mean is I want to buy the absolute lowest price and sell the absolute highest price. But that's something that's common with everybody when they first start. And you want to learn to acknowledge that's what's going on with you, and then work against that. Don't fall into that kind of trap of thinking. Again, you want to start to learn where are your bottoms and your tops rather than where are your events, your highest and lowest prices, which are your events. You've got a lot more possibility of being successful longing in here than trying to long right here at $36,413.26. You got more of a fudge room here. You got more of a ability to be, to not be exact there. Gives you a little bit more freedom. Same thing with up here if you're trying to sell, rather than trying to sell at that very high up there. Especially when you're new and you may not understand Wyckoff or things like that, which can help you understand these ranges much better. But remember, Wyckoff is not those schematics that just show price action. It's a price action and volume analysis. It's the price action and volume associated with it, as well as that combo of price action and volume compared against appropriate other areas within and without the range, their price action and volume. So it's a very nuanced thing. But most of the people you'll see online today talking about Wyckoff will just give you a schematic, or they'll just show you this and they won't have any volume on there. It'll look something like this here. And this is, if you're looking at this going, Wyckoff says blah, 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 you're not. You absolutely have to have volume, guys. Okay? Don't forget that. Well, we're going up and down all along the way. Let's see here. Yeah, so one of the best things you guys can do, again, I look at these things a lot of different ways. People in Discord know this, our members in Discord. And I do that because some of y'all are going to gravitate toward Elliott Wave, and that's great. Others will gravitate toward Wyckoff. Others will gravitate toward my supply and demand structures. Others will gravitate maybe even more toward patterns or volume price action analysis that's maybe not really completely Wyckoff, or even indicators. And so I try and show all these things so that way everybody can understand how to do these things, and they figure out what works for them. Eventually, guys, all these things lead you to the same place, but you have to take the time. You have to take the time to get in there and do it, and you have to take the time to practice, just like anything else you do. I don't know if any of y'all have ever played sports or played musical instruments or were in the chess club or something in school. But at the end of the day, all those skill sets took time, right? Are you gamers? It takes time, right? You got to practice. So it's the same thing with trading, but people don't generally in their minds have the patience to do that, right? But you want to, you need to, you have to. Patience is the number one skill you will need to be a successful trader over time, guys. But patience and lack of patience the lack of patience is emotional. Okay, and emotions are going to lose you money in the markets. You may get good every once in a while off an emotion. You get lucky, but in general, emotions are going to lose you a lot of money trading. Okay. Oh, Lamb, man. I hope your mom's okay, buddy. Hope she's all right. Scott, what's up, buddy? He says, would you say Wyckoff is better at tagging these tops and bottoms versus looking at market structure breaks, etc.? Well, if you really learn Wyckoff, you'll understand market structures. Because we actually use it in Wyckoff. I mean, if you're creating a range and you're getting lower highs in that range, you're going to get a lower spring. If you're getting higher highs in that range, you're probably just going to get an LPS, not a spring. So, I mean, that's basic market structure right there, with where you're at and where you're coming off of. I mean, I think Wyckoff is a fantastic thing. It really is a great way to learn to trade because it helps you understand ranges. And since price action ranges 75 to 85% of the time, most of your time trading is spent sideways. So the more you can understand about what's going on sideways and what's going on with your buyers and sellers and your supply and demand in those areas, the more it's going to help you necessarily as you trade. But it is, Wyckoff, guys, you'll probably learn Elliott Wave easier than you'll learn Wyckoff in general. Wyckoff is just volume and price action analysis takes some time to get used to seeing it. To understand, you can get there and get through all the rules and understand how Wyckoff is applied, but it takes time to really see it in the charts and understanding what that volume and price action are telling you. And for most people, they're impatient and they don't take the time. They say they don't have the time to learn to do it properly. Well, if you're not learning to do anything properly, there's no reason to do it, right? Anything that you wish to learn in life, you should wish to learn well, right? So yeah. Oh, good to hear, Lamb. Well, I hope she does well after her surgery, buddy. Teo, what's up, buddy? Always good to see you checking in. Diego checking in as well. I see you, man. So yeah. I mean, I'm a big, guys, at the end of the day, you hear me talk a lot about Elliott Wave, and then you hear me talk a lot about price action and volume. But what you don't hear me talk about is the labeling of ranges and Wyckoff terminology a lot. But understand that's the basis of what I do. And, so in my mind, I'm already going through all that. I know what I'm looking at there. But this other stuff is much more visible. It gives you, things to look at. Whereas, Wyckoff is not like really, here's your target. It's an understanding of what's going on in the range. And so that's why I spend more time talking about the other things that can give you targets and things to look at versus, really going out there and saying, okay, well, we've got buying climax, automatic reaction, ST. So now we got lower highs here. It gets to lower low. It's not a spring because of the volume. It's a show of weakness. You get this breakout up here to this up thrust after distribution, and you get this breakdown with your last point of supply. It breaks down. It falls through the ice. You break back up. Last point of supply. There's your mark down. You're coming down here, potentially starting your sideways here with your accumulation. You see, so in my head, it's all there. But for you guys, because you're looking for where is price likely headed, some kind of target areas, it's easier to do with Elliott Wave. Because you don't look at these and go, okay, well, it's going to drop, $50 below the swing low there kind of thing. For a spring or for a show of weakness, or if you happen to be doing. So yeah. No, you don't have to take volume in with Elliott Wave. You don't have to. You can. It helps if you understand volume and price action. But Elliott Wave, understand, guys, Elliott Wave is all about structure. It's not about price. It's not about volume. Didn't mean to do that. It's not about time. Elliott Wave is just about this right here, this structure. How far does price extend? How far does it pull back? That's what it's about. That's Elliott Wave. Now, if you know price action and volume analysis, it can help you. Yes, definitely can help you. But Elliott Wave itself is only about structure, about price action structure. I think it's where people get thrown off because they ask me, okay, well, how long is it going to take for wave 2 to complete? Or how long is it going to take to get to wave 3? Don't know, don't care. Honestly, because Elliott Wave isn't about that time. It isn't about, the price or the time or the volume or whatever. It's about the way in which price action moves. So yeah, that's what it's about there. I'm kind of throw these things back up here. But yeah, so that's exactly what I say about Elliott Wave. Yeah, it's all about understanding. The best way to really get the most out of Elliott Wave, especially at the beginning, guys, is not to look at it to give you an exact target, but look at it to give you an understanding of where the trend may be, of what the trend may be, and how far along you are in that trend on that time frame, and if you've got a potential reversal maybe coming up, something like that. Yeah. I wouldn't, again, when I trade, guys, I don't ever trade, like if I've got a target at the 1.618, I don't immediately try and, sell at that target because I understand that price action can do like it did with USD CAD this morning. Let me see here. So with the US dollar against the loonie this morning, we had, let me kind of zoom out here a bit. You have this strong move here, right? And that kind of came out of nowhere. And so, you'll get stuff like this. And it'll invalidate a account you're looking at and force you into another account. It's just the way it is. So right now this becomes, I was looking at potentially, I was thinking maybe we have a 1, 2, 3, 4, 5. So this is a 1, 2 as a leading diagonal. And it may still be. It may still be. But until that point, I'm looking at this maybe as a 1, 2, and then 1, 2, and then 1, 2, 3, 4, 5. Gives us a 1, 2, 3, 4, 5, which will give us a 1, 2, 3, 4, and then of course that 5 up there around the R2 pivot potentially. So yeah, but Elliott Wave kind of gives you that directional help more than I think that's the best way to do it. And you're like, oh, but what if I take profit too early? So what? I took profit too early here. I got it at about 62 pips instead of it went up I think like 100 or 110 pips. I missed out on the last half of that, but it's all right. I got 60 plus pips this morning, overnight into this morning. It was good. And it just did something different than what I expected. But in general, this was the trend, and I was correct about that. And I was able to lock in profit, and that's the important thing. You got that? Hope that makes sense. Adam says, what's the best way of going about trading if you only want to check the charts once per week? Yeah, Lamb's right, man. Swing trading. If you only want to check it once per week, man, you guys should be jumping out here to the daily maybe. If you're looking weekly, I wouldn't look any lower than the daily. You should look at the daily, the weekly, and the monthly, generally. But even the day, if you're looking once a week, even the daily might be too much for you. But I definitely wouldn't go any lower than the daily. I would stick with probably the weekly and the monthly, if that's what you're looking at. And that's what I would look at. And it's a lot clearer picture, right? You got a lot less of the all that up and down overlapping, which we call noise. You got a lot less of that. You've got a lot more structure, a lot more clear structure here, right? Like even moving out here to the weekly. Still, a lot more structure here, right? Then you jump into the daily, and all of a sudden, well, now there's a lot more of this overlapping and other stuff going on. But if you just want to trade that larger time frame, yeah, I used to stick out there to the weekly and monthly for that. Mark, have a great day, bud. Yeah, that's right. Hank's repeating what I say all the time, guys. Basically, you know, if you're taking profit, don't look a gift horse in the mouth. Because here's the thing, guys. How often do you regularly take profit? For most of you, I bet you it's not very often, right? In fact, I bet you're often losing money, right? Because you're not taking profit. As long as you're consistently taking profit, time and compounding are going to get you where you want to get in due course. As long as you're always as long as you're always scared the price is going to go further without you, you're going to end up losing more money than you're going to make. So figure out where you're exiting, figure out why, make sure it makes sense. Make sure it gels with the time frame. If you're trying to trade 15-minute time frames and you've got a $10,000 target, you're not doing it right. Okay? You're going to end up losing your money on that. If you got a $10,000 target here on Bitcoin, you better be on the daily. You might be able to swing into the 4, maybe. But you should be about the daily if you're looking for $10,000 movement from where we are right now. That's just less than a third. About almost 25% from where we're at. It's a lot of movement, guys. You shouldn't be on the 15-minute chart looking for a $10,000 move. Okay? Let's see here. Man, Lamb, keep it up, bud. I mean, I like hearing that. Over 50% profit on trades. Yeah, no reason to complain there, man. Keep it up. Let's see, a TV canal, you think this is fake? See it stop at the 1618, so now everybody's bullish. Stay long, and this will be gas for bears. It's possible. It's possible, but remember, the 1618 is the wave 3 target. And remember, right here, we're looking at the possibility that this is 3 here, and this is A, ABC down for A, ABC up for B, 1, 2, 3, 4, 5. So this flat correction is a 4. And then 1, flat correction for 2. Usually at 3. And for right now, we're hanging around this daily pivot. Again, you know what, you guys? Watch the daily pivot. If you get a strong impulsive drop down below it that closes below it and then stays the next day below it, then that's probably a good sign that it's going to head on back down here. However, if we get a reversal around here or it drops below and then turns around and rallies right back up, that's a good sign that this pivot's holding a support and we're going to see it head on up here through the pivots. So, you know, larger time frame kind of analysis there. Watch that daily pivot and see how we do there. Because if you look right here, see all this, always look left, guys. You see this resistance, support, resistance area here? You know, we may see a pull down to that, catch a bid, because then you got people who are sitting this way, you know, pulling back there ready to catch that bid as it goes off. Because here's what happened. You see we've got this range right here. Notice we rallied right through it, right? No stopping. We just rallied right through it, right? So we've got this range of interest right here, rallied right through it. Often when we see that, we'll pull back to this range right here, and then it'll work as support, and we'll retest as support and pop on up. And that's because we rallied right through at that time. We didn't like hit it and pull back and hit it and pull back and go through it. We just shot right through it. So that's the same thing as right here, guys. If you were following me back here in 1819, right here, this was the same thing here. We had this range right here at around 6. Everybody swore up and down it was going to get rejected at 6, head on back down below 1,000, right? And I told everybody, I said, no, I said it's going to shoot on right through it. And then it's going to back test it as support, right? And so it's this range right here, really. And that's exactly what happens. It rallied through, it came back, retested as support, because right here, this was the breakdown. This was the move up. This was a clean, nice move up. This should rally straight through this, because those that are right here should then use it as support. They're going to allow price to fly through it. They're not interested in selling into and stopping it, because they were buying here. They bought right here, all here. Maybe back here in November, here in February, here again in June, here again in August, you know, continuing through. They're going to let it through. And then when it comes back down to them, they're going to protect that. And that's what happens. Boom. And you see it. Boom. Big wick back up. And then it continues up off that. And then look what happens here as you continue coming over here. Look at this. Still support, boom, boom. And then it finally falls through. But right here, you see how it kind of dug into it here first? This case, it went right up through it. This one, it hit it, bounced up here, and then shoved it through. That's the difference between what happened here on the drop through and what happened here. You didn't have any break, you know, pushing up into it, pushing up, rejection, and then finally a breakthrough. You just went right through. Sliced through it like a hot knife through butter. This was not the same way. This was digging, pull back, shove it through. Which is why then, you know, it didn't stop it here and reject it off. It comes back up here, and you see the rejections as it works its way through this area right here. You see how it hits it, boom, pulls back, and then finally it breaks out through, right? And now it goes up. So kind of the same thing that we're looking at right here. You've got all this right here. It allows it to go up. So if we're getting down to this area, I'm looking for, if we can get it, a bounce out of there, a reversal off that and head up if we get it. Again, depends on what goes on right here. I hope that makes sense, though, guys. Alan N. says, thanks for all the streaming you do. I've been a bit of a lurker, but just wanted you to know that I appreciate what you do. Man, well, hey, listen, Alan, thank you so much for watching along and taking time out of your day to say that, man. I mean, you know, I know, you know, it's a choice that you have to make, guys, if you say something like that to me, if you take the time to do it. And I acknowledge that. I understand that, and I really do appreciate it. You know, whether you say it all the time or whether you just one time you say it, the fact that you're taking that time out of your day, which you could do other things, to share that with me means a lot. So I appreciate it. Thank you. Thank you. How do you apply Elliott Wave and Wyckoff swing trading when only looking at larger time frames? Oh, same idea. Same idea. So this right here is a range. This right here is range here with Wyckoff. Here's another range. Here's another range up here. Here's another range right here. Yeah, you just apply it the same way. You're just on a larger time frame. That's all. You know, and a lot of people aren't used to this. So when I was doing Wyckoff back in 2017, I talked about this being the bottom of the range here, right? And this being a whole range here, a reaccumulation range. And I got a lot of flack from people that didn't know what they were talking about. And sure enough, it ends up being that was the range. We had the breakdown here on this this bit of terminal shakeout here, which then created its own range, which is what you'll often get after a terminal shakeout is you'll get a range because this just wears everybody out and freaks them out. So it takes a little bit for them to buy back in, and then it goes, boom, back up into the range here. And we're good to go. You know, and again, as far as Elliott Wave counts, you know, again, yeah, just pushing it through here. Now, you're not going to start your Elliott Wave right here because this market, this chart only starts back in December of 2014 when Coinbase started allowing trading of Bitcoin. You'll want to get like the BLX. So your BLX is your Brave New Coin Liquid Index. And this will give you the chart from back here in October of 2010. And then you look there, and depending on how you want to count, there's a couple of different ways you could do this. But maybe you get a 1, 2, and then maybe a 3, 4, and then a 1, 2, 3, 4, 5 working here. Or 1, 2, 3, 4, and then 5, and so this becomes a 1, 2. Or, you know, again, it just depends on how you want to count it there with you doing it. But, you know, again, you just apply Elliott Wave or Wyckoff the same way that you would apply it on those shorter time frames. You've just got more to work with. You have your range, you know, you have your range here, here, and here for Wyckoff. You got your range right here. Got a range right here, here, and here. And so, you know, yeah, you might have to zoom in just a bit to the weekly or something to get a better idea of that range. But nonetheless, you have it there. You've got this range. Again, you've got this distribution and this potential reaccumulation right here as you work there. So yeah. But that's, you know, that's how you do it, just the same way. TV Canal says, if this is wave 3, I expect a long pullback to 33,000. Why do you think it has to scare all the bulls? I'm interested in why you would think it would have to scare them. You know, if we look at this, let me kind of zip back out there to the other chart here. Oh, which one? This one. That's what I'm trying to get to. You know, I'm not worried about scaring this and scaring that. If I'm looking at Elliott Wave, remember, Elliott Wave is about structure. So if this is 3, this is 1, this is a flat as 2, this is a 3, I'm looking back. I'm looking at my 38 too. Again, the 50% will take you into wave 1, so I'm not a fan of that. Though it's really just kind of the wick right there, so really iffy. I would really kind of look for that 38 too, or maybe even the EQ here between them, if this was to be a 4. But right now, as long as we're above this wave circle 4 here, this could just be wave 1 of 5, as this black count says. 2, you get that 3 up there, pull back for 4, and you get the 5 up a little bit higher. And then you get, you know, wave 5 is done. But, you know, as long as it doesn't break down below this level, that's still possible. Now, again, if it breaks down below that level, either this is done, this is 5 up and done, and wave B is done, and we're headed down to 23 or potentially lower. Or, again, the other bullish count says, this is 3, this is 4, and then, you know, we have 5 coming up, which, again, should still come out, you know, looking at either this R2 pivot on the 1 hour here, 46,585, you know, and the bottom of this supply structure, that would be the initial target, or secondary target up here around the EQ of that supply structure. Yeah. But you definitely have to wait, guys. You can't just jump in. Don't sit there and go, oh, well, I have a strong feeling it's going to be this or that. Stop doing that to yourselves. Look for something, something that gives it possibility. Right now, locally, I wouldn't be interested in entering at least until it breaks out of this descending resistance, at least. That's what I want to see. As long as we don't get that breakout, it can still continue falling lower. So you got to be smart about where you enter, guys. You got to look for those, and especially if you can, those higher confidence trades, the ones that are more likely to work out. Bullish or bearish divergences, stuff like that. A bounce off the EQ of a supplier demand structure, stuff like that. Off a pivot. Those would be higher confidence trades. None of them guarantee that price will continue from it, but they increase the confidence that it will, the idea that it will. So yeah. Oh my gosh, I'm really over here, guys. I'm so sorry, Bill. Have a great day, man. I'm just going on here. It's about 10 after 7. 10 after 7. No, it's about 7 after 1. There we go. I hope you guys have a fantastic day. Thanks so much for joining in, and sorry for the trolls and whatnot that came in there. It happens. It's part of what it is. Thankfully, I don't make much money, if anything at all, off these streams. Not even really coffee money if I drank coffee. So it doesn't bother me. They get all the down thumbs. It is what it is. I hope you guys have a fantastic day. And remember, the only thing you control in the market is how much you lose. That's it. Follow me at TX West Capital on Twitter. And join us at howtotradetowin.com. We'd love to have you there. You guys have a great day. And I'll be back on Friday at 11 a.m. Central Standard Time, all right? Take care, everybody. Thank you.